Good morning and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Tuesday, November 5th, 2019. Oh, Zach, how'd you do this weekend? I know things have gotten a little darker in Seattle, maybe a little bit wetter.
It's surprising when that daylight savings time comes. It gets real dark real quick. So
yeah, it's dark anyway, isn't it? I mean, you all in this, didn't you say this is like your dark period?
I think that's what David Keller keeps saying, but I mean, I've grown up and lived here my whole life, so it feels normal. I don't know.
Well, I think that's saying something, though, because Dave, I know, is coming from Cleveland. So if he's coming from Cleveland and saying Seattle is dark.
It's the weather, apparently, he was saying, is kind of a little bit similar to Cleveland's. I don't think he hasn't made it into the winter time yet. So Cleveland's probably a lot more cold than we are. We're just wet during the winter time. But yeah, it is dark. Like it's like 5 o'clock is all lights out kind of thing. So
yep, I get it. That's all right. It'll be lighting up there again in about 5 months. So get that to look forward. All right, we got a lot going on. I tell you, the S&P 500 just keeps breaking out the new highs, but we got quite an agenda for you today. We'll be going through, of course, the daily market recap, talk about some things happened yesterday, look ahead, the earnings spotlight. A lot of companies reported after the bell last night, and again this morning. Still a ton of companies reporting this week. If you own stocks and you want to hold into earnings, that's fine. Just make sure you're aware of it. Upgrades and downgrades. Always have a bunch of those. We'll have some interesting charts there. Relatively speaking, this is a pretty regular topic that I like to talk about because I think relative strength is very important. So we're going to take a look at maybe over the last few months to see how, because things have really changed over the last few months. This has been a crazy 3-month period. You think, okay, we're breaking out the same old, but it really isn't. We're actually getting strength from different areas. So we'll take a look back and just over the last 3 months, see how things are shifting. Go into moving time. Got a lot of companies moving, especially with earnings. So got plenty to talk about there. And then we'll wrap up the show with 3 you must see. These are 3 charts I like to give at the end of each show. Got a couple interesting ones today. I think you'll find interesting anyway. But we'll get into that in time. Let's start off with the daily market recap. It was just another record-setting day on Wall Street. You can see the Dow Jones Industrial Average up 115 points. That's 0.42%. It is clearly into record territory, joining the S&P 500, which has now been in record territory for about 4 or 5 trading days. NASDAQ also yesterday closing above 8,400 for the first time in record high territory. Small caps, not in record high territory, but certainly taking out recent highs. This is good news for the market. Anytime we get the small caps moving, transports moving, and the treasuries selling off, that combination helps to fuel the stock market. That's been the history, and it certainly seems to be the formula again this time. 10-year Treasury yield today is up another few basis points. That is good news. If we get through 190, it's just another confirmation of money rotating away from Treasuries and into the stock market. So watch that 190 level there. As far as the individual areas of the market, the sectors, energy getting a pop. So this has been the weakest area of the market. And when you got a bull market, you really want wide participation. So it's nice to see energy finally joining the party here. Still got a ways to go to take out prior highs, but definitely last couple of days, very strong days. Yesterday up more than 3%. Crude oil has been moving. And I know this morning crude oil was up another 1% or close to it, back up over $57 a barrel. So energy may get another lift today. Industrials really moving to the upside. And I like it when this group is moving. Because a lot of times it's moving because of transports. It is again. I've said watch 11,000 on the transports. I believe a breakout above 11,000 will confirm what I think we already have, which is a really strong bull market advance that's underway. But a move through 11,000 here on the transports, I think, would further confirm that. Weakness yesterday was seen in the utilities area and real estate, 2 defensive groups. I would look for these 2 groups to continue to lag anytime we get a bull market advance. Normally, you're going to see the defensive stocks take a back seat. If they don't, if they're actually leading the market, that's when I'd be a little bit more nervous about the actual market, the health of the advance. But right now, everything's lined up. Looks like the market wants to go higher to me. We will absolutely have pullbacks along the way that we have to be prepared for, but those are probably going to be short-lived. We are in the most bullish period of the year historically, October 27th close through the January 18th close. There is no time of the year better than those, 11 weeks or so. That is going to be a tailwind, I think, for the market as we close out 2019 and head into 2020. All right, let's take a look at the 10-year Treasury yield. This is talked a little bit about the fact that we've been moving. One of the things I've noticed is, throughout the downtrend, we had a lot of these big filled red candles, which when the yield's doing that, that means that the treasuries are being bought throughout the day. And when treasuries are being bought, means market's more defensive. This move here, when we have pulled back, you can even see a couple hollow red candles, which means we gap down, but we then rally from there. Not a whole lot of filled candles in here, meaning that there's a lot more movement to the upside in the yield, which means downside in treasuries. That's helping to fuel the stock market. One of the things we talked about when I did my market outlook, I wanted to follow the 10-year treasury yield. I think a breakout above 190 would be extremely bullish. I think a breakout in transports and small caps would certainly confirm that, and that is what we have been seeing of late. I do want to mention that gold is down $10 this morning to $1,500 an ounce. The dollar is bouncing a bit, and that's putting a little bit of downward pressure on gold. Asia stocks up overnight. The Nikkei up 1.76%. Huge move there. Europe's higher this morning. The DAX, now this was probably 20 minutes ago, DAX was up 10 points to 13,146. I just want to point something out to you here about the DAX. I know that the U.S. has been leading in terms of relative strength when you look at global markets, but that's been changing here a little bit over the last couple of months. And this has been coinciding with the 10-year Treasury yield here in the U.S. dropping relative to Germany. So it's almost like the market's beginning to tell us that Germany is, and maybe other parts of the world, could be outperforming the S&P. I'm focused on the S&P 500 because I do just about all of my trading here in the U.S. But it's noteworthy if you like to trade outside the U.S., maybe for the first time in quite some time, some of these global markets actually are starting to look a little bit better to me than the S&P, even though I think the S&P is going to be strong. I think this is going to be a worldwide global rally, and we may even see some outperformance from areas around the world that have underperformed the S&P 500 the past few years. Okay, there are a couple economic reports that are due out in a bit. 9:45 this morning, we'll get the October PMI services, market expecting 51.0. And then the October ISM non-manufacturing index will be released at 10 a.m. Eastern, and that estimate is at 53.5. So a couple of reports there, 9:45 and 10 Eastern, just a little bit after the market opens. We will want to keep an eye on that. Let's move our attention on to earnings reports. And the first one, I want to go over a couple of these bigger names first. And let's pull up Uber. Uber, despite coming in with some pretty good numbers, they beat on the top line, beat on the bottom line, guided fiscal year 19 earnings per share higher. You would think, okay, well, it's been beaten up. It's actually come out with a pretty good report. Maybe it'll get a lift, no pun intended. But it is not getting a lift. It is actually down 7% in pre-market. That would take it down another couple bucks, very close to this low. Watch for a hollow candle. I think if we get this gap down, we got some pretty decent news out here. This stock's been under pressure for quite a while. $47 back at the beginning of July, early October down below 29. If we go back down, put in a double bottom, you see a hollow candle print on big volume, could be accumulation. Then a breakout above this $34 level would be pretty bullish. So I think Uber's one to watch. I don't know if I'd be jumping in, especially with the market reaction. Watch to see if it holds this support level. If it doesn't, then we've got some other issues, I think. All right, Marriott reported. They also reported pretty good numbers on the top line beating, but they missed on their bottom line, and they too are down about 2.5% in pre-market trading. So we're talking about maybe what is that? Maybe $3, something like that. I think that the uptrend has begun here, though. So I think a pullback's likely to hold that rising 20-day moving average. If it doesn't, that would be my cue to avoid Marriott. Otherwise, I think we could hold that 20-day and break to new highs. I think the big number is going to come up here in this gap resistance area where we failed back in September. All right, OXY, this is Occidental Petroleum. This was a company that I had featured as it was actually in the Earnings Beats Digest, the free newsletter that we have. I publish it 3 times a week, Monday, Wednesday, Friday. If you don't already get it, go to earningsbeats.com. You'll see it right in front of you when you get to the website. Just fill out name, email address, and we'll start sending it to you Monday, Wednesday, Friday. But the thing I pointed out here with OXY, we talk a lot about relative strength, and if you're going to hold a company into its earnings report, make sure that it's got good, solid relative strength, because it gives you an indication that Wall Street is supporting the company. And of course, Wall Street's been out meeting with the company prior to the quiet period. So, but unfortunately, Occidental Petroleum has been in this downtrend for quite a while. Last couple of days gotten a lift because of overall energy. Crude oil prices have been moving up. Energy shares have been doing well. But look at the relative strength. It's going up because the group has been going up. And the group still got a lot of work. You can see a couple of different serious overhead resistance levels. It's got to try to negotiate. But even if the group goes up, if you've got a laggard, you're not going to outperform. So you got to be really careful with a stock like this. So I wrote about this yesterday morning before they were reporting their earnings last night. And they came out, I mean, they absolutely, their earnings per share were abysmal. I didn't see their revenues, but the earnings per share came in way below expectations. And so I wasn't overly surprised. Now, the market reaction wasn't too bad. But, and I'm going to get the latest here because I want to see where it is, see if it was still in negative territory earlier. Yeah, it's down about 0.5% right now. It's trading at $44. So it's not horrible, but again, you've got a group that's been on fire last couple of days. Oil prices up again today. I would think energy is going to do well, and this remains one of the laggards. And so again, I just think it's really important to pay attention to what's going on with relative strength. All right, next up, let's see. Couple that came out this morning, couple big companies, Becton Dickinson, BDX. And if we look at it on this relative chart, you can see it is in the medical supplies group. Medical supplies been strengthening of late. BDX was in a position to make a breakout in this sideways consolidation. Unfortunately, it is down 4%. It only matched expectations on the bottom line, $3.31 versus $3.31. And then they guided their fiscal year 20 revenues and earnings per share lower. Stock was down 4% last time I looked, which would be roughly about $10. It's still in this sideways consolidation. If it does open around the 250 level, wouldn't necessarily give up on it, but it's not the type of stock that I would trade going forward because I only trade companies that beat top and bottom line. So BDX has some work to do. REGN. Now, this one I think is worth paying attention to on a couple levels. First of all, they did come through, beat on the top line and beat on the bottom line. The stock's up 4%, $12 in pre-market. The thing I like about it mostly is that biotechs have absolutely caught fire here. When you look at REGN relative to the biotechs, it looks like it's going up a lot. But literally, it's just going up because the group's going up. It hasn't really done much on a relative basis. That could change with this earnings report and is one of the reasons why I'd be watching it very closely. Since we had this huge move down, we have had reaction highs up around the 320, well, into the 320s. So I think if we start to see 330s print and the volume is there and you've got an earnings beat, a revenue beat, this is a stock that could absolutely fly over the long term. I think if we go back and we look at a long-term chart, you'll see that this is a company that made a huge run for about 5 or 6 years. I mean, we're talking about from maybe $15, $20 up to several $100s. And it has simply gone sideways to down for the last 4 years. So if it gets a little catalyst and gets going, just know what this company has done in the past. All right, another ZBH. This is Zimmer Biomed, ZBH. Zimmer Biomet holding stock's been sideways consolidating. Actually been a pretty good performer, though, heading into its earnings. I gave this one a pretty decent chance of doing well. It actually did beat top line, beat bottom line. Stock's up 3%. in the pre-market trading today, and it looks like it's going to open up close to this 142 area. If it opens above 142.5, I'd be more bullish. If it opens below it, then we're going to have to see that confirmed close, and we may see more consolidation. So watch that level, but nonetheless, good report there. All right, let's move on into let's go into upgrades and downgrades. So we got a few stocks here. I just talked about REGN and the biotech sector or industry group. Let's pull up Amgen, because Amgen has all of a sudden caught fire. And whereas REGN was not a leader, you can see here, this Amgen has had a huge move over the course of the last 4 or 5 months, strong volume trends, and it is one of the leaders. It had a huge relative move back in late July, throughout August. And then since then, it's kind of consolidated here. But it has broken out again, and I suspect if the biotechs go, probably going to see some leadership here from Amgen. So I would agree with this upgrade. EVER, EverQuote. This is a company that did report earnings after the bell yesterday. They're getting upgraded today. I completely agree with it. They blew the numbers out of the water here. EVER revenue 67.1 million versus 58.3. Bottom line, they earned a penny. Market was looking for a loss of 8 cents. They guided Q4 revenues and earnings per share higher. Stock up 27% pre-market. Looks like it is easily going to clear that prior double top at the open today. So this was a stock that gapped up, went up for a while. It's actually one of our portfolio stocks, pulled all the way back here to test the top of this gap support, and then started catching fire heading into earnings, and now we see why today. All right, let's see. Next upgrade, Facebook. Facebook upgraded today, starting to strengthen. Look at the volume coming in the past few days. We've got the stock now moving up to about a 3-month relative high to the internet group. Internet's starting to strengthen here, trying to make a breakout. I would agree with the upgrade. I think Facebook will perform well balance of the year and into 2020. Downgrades, Schwab, SCHW. Stock, as you can see, on a relative downtrend. I think it's got to clear this overhead resistance. Hasn't done it yet. A lot of negativity surrounding the stock as a result of free online trades, commissions, and had a beautiful bounce back. But notice the volume was drifting lower. I would tend to agree with this downgrade. I think the stock's got to clear about 44.5, and we need to see some relative strength. Until then, I would be downgrading it as well. Prudential also downgraded today. This one came up and went just above the bottom of gap resistance yesterday and gets the downgrade. Yes, it's been trending higher for the last 2 months, but it remains, in my opinion, in an overall downtrend. I'm not surprised by the downgrade. I think there are others out there in the life insurance area and in financials in general that look better. So I'd be okay with that downgrade. All right, let's move on to relatively speaking. And I thought what I would do here, most of you probably know, I keep a relative strength industry group chart list. And one thing you can do, and so I've got every one of the industry groups here in a chart list, so there's 104 of them. One thing you can do with this list is view all and then click on summary. And then what I said earlier in the show, this just gives you how each one of these industry interesting to see what groups have been outperforming the S&P 500 over the last 3 months. The first one on the list, tires. Now, this has been a good group, but when I pulled the chart up, I still see a downtrend. This was so incredibly oversold. I'm not sure I would consider this much more than a bounce at this point. I know it's been a great run for the last 3 months, but I'm still not sold here. So I'm going to pass on that one. However, the second one on this list is one that I've been talking about for quite a while. And the computer hardware group obviously being led by Apple, but look at the relative strength here. Look at this relative PPO pointing straight up. I mean, there isn't a better area of the market. If you've owned Apple, you know what I'm talking about. Apple's been going straight up. Computer hardware has been going straight up. And not only are we getting the relative breakout, but we got an absolute price breakout probably about 5-6 weeks ago. And so computer hardware to me continues to look really strong. Furnishings and holdings, or furnishings. This one is starting to show more strength. Now, this one, as opposed to tires, you can see the huge move up. It's taken out these prior relative highs. So we're now trading at about a 1-year relative high to the S&P 500. That's good. Relative PPO has turned positive. The 20-week EMA has moved above the 50-week, which is another positive. This is the configuration that I like. So until furnishings proves me wrong, I would say this is a group that you certainly want to consider. In other words, if I like a stock and it's in this space, I'd be a fan. All right. The other thing that you can do is see, okay, what's not been working. You know, if you're not sure, I can probably tell you without even looking because I've owned some of these groups. Renewable energy, definitely. All of a sudden, here was the outperformance for about 9-10 months. And now look at the last 3 months. It has been horrible in this space. Hard to say why, because it seemed to be just rolling along. But for whatever reason, it has really taken a tumble. This group, if you go back and look at the history, it's just an incredibly volatile group. So it's great to be in it when it's rising, not so great when it is falling. But definitely things have changed there. So some work's going to have to be done for that to turn. The other one I wanted to just point out is restaurants. We saw after the bell, I think it was after the bell last night. Yeah, Shake Shack came out, stock down 17% after hours. A lot of the weakness that we've seen in many of the restaurants is because the overall group has been going down. It's dragging them all down. Chipotle came out, great results, and yet the stock continues to go down because of this relative weakness. So again, this was one that looked great for a year, but the last 3 months, it has been brutal in this space. Really no warning that it was coming, but it has hit, and it's hit hard. A lot of it is just the fact that the group ran up so much for so long. I would be surprised if we don't see a recovery, but it may have to get back down the 1700s before we see that turn back to the upside. All right, so that's it for relatively speaking. I'm going to move on now to moving time. And I just thought maybe a week or so ago, I think I was talking about break it down, and did a couple of areas of the market, commercial vehicles and trucks, industrial machinery. And I showed how these stocks were setting up. Some of them I talked about their earnings that had come out that were very strong. So what I wanted to do was just show you, let's just go over here and pull up a couple of stocks. So in the commercial vehicles and truck space, figure moving time, commercial vehicles and trucks, there you go. They're moving something, moving dirt. But let's pull up the relative chart. Look at leadership that now is being established in some other areas of the market. PCAR, great earnings. They came in, they beat, it was $1.75 versus $1.64 back on October 22nd, the big volume day here. That basically was when we broke out of this long period of consolidation, continuing to move higher. You've got a leader here and one that reported strong results. If we get a pullback, and we will at some point, PCAR on any kind of a test down near recent lows, maybe 75, 76, as this rising 20-day moving average comes up from underneath, that would be something I would certainly be paying attention to. Let's see. Also in this space, look at OSK, Oshkosh, showing relative leadership. It's pulled back on a relative basis as it consolidates, but it's made the breakout on big volume, and it just hit a 52-week high. Certainly another one that's been moving. Let's go a smaller company, HEES. This is they posted 79 cents versus 68. I think I had mentioned them as well. They posted back on October 24th. Look at the volume coming in, the breakout, sideways consolidation, relative strength in your favor. These are stocks that we want to consider. Let's move on now into the industrial machinery area that I had talked about. And I know BWXT just reported today. This is a smaller company, but you can see the huge move up, nice little cup. Didn't see where it was trading in pre-market, but it had broken out a couple months ago, was sitting at a new high. And while it consolidated, it pulled back. But I would be surprised if we don't see some renewed strength today on BWXT. SPXC, this is another smaller company, just giving you a couple of small names as well. But here was a big gap up with earnings just a few days ago. Look at the relative strength here, breaking to a new high. So as the market changes and we see these the relative strength change in different areas, we've got to be looking for the companies that are leading these pushes to the upside. And SPXC certainly is one of those. Okay, let's move into our final segment, 3 You Must See. This is always a fun segment. I like to go through and point out some charts that are looking interesting to me. If you looked yesterday at the dashboard for the S&P 500, notice FedEx was up 5% yesterday. A lot of the transportation services companies, definitely, freight companies, all of these companies have been moving. FDX, you can see making this big move on the chart. You might think, hey, this one looks really good. Let me show you a little bit on the relative strength chart, and this may alter your opinion. So FedEx, you can see, has been in this downtrend. Yes, yesterday was a great day, but it's got some more work to do. We got a double top here. We got gap resistance all the way over here. 175 to 177, 178. That could be in the cards here for the stocks. Got another $10, $12, $13 to go. But once we get up there, we're going to have some overhead resistance. And look at the relative strength versus the air freight group. You can see all of a sudden this one doesn't look nearly as good. And that brings me to my second chart, which is in the same space, UPS, United Parcel. Now, this chart looks a lot different to me. Big move up here, 3 white soldiers, massive volume. That's a really good sign. If I annotate this one and just show you, to me, that where it gapped up to is going to be great support. If we do manage to continue to sideways consolidate for a while and it ever gets back down that level, that would be an area for sure that I would be interested, right around 109. To the upside, we've got a breakout above 123 or so. Got close yesterday, finished at 123.02. Volume picking back up again, but look at the relative strength here. You see UPS going up in terms of relative strength, and FedEx had been going down. So that's something to consider. Let me drop this in. And then I'll give you my final. All right, so one more chart, and this is one that I think is really beginning to make a move. I think it's changing its character from a downtrending stock to an uptrending stock, and this is Walgreens Boots Alliance. Stock had been down for a while. You can see the relative weakness versus the drug retailers. The group had been bad. The stock had been horrible. Well, that's changing now. The group the group on an absolute basis just moved to about a 7-month high. Walgreens versus the group has moved to about a 7-month high, and the volume is starting to pick up on these moves to the upside. Notice the volume trends are changing. So this is a stock that I believe is one that we certainly want to keep an eye on. Maybe on any pullback, we're starting to bounce off that 20-day moving average, which I find very bullish. I think Walgreens Boots Alliance is one that is changing from a downtrending stock to an uptrending stock. And we'll get an opportunity on a pullback. I think this is one that we can pull the trigger on. All right, so those are the 3 you must see: FedEx, UPS, and Walgreens Boots Alliance. And it is time now to wrap this thing up. I do want to thank everybody for joining me today. Always remember to tune in to Trading Places Live right here on StockCharts TV every Tuesday and Thursday from 9 a.m. to 9:30 a.m. Eastern. Love having you here. Have a great day today. Happy trading.
Today's market volatility provides savvy traders and active investors with an abundance of profitable opportunities. At the Traders Expo Las Vegas, November 7th through 9th, over 75 of the most respected traders in the world, including Dennis Gartman, Tom Sosnoff, Todd Gordon, and Tom DeMark, will explain how they're adapting their strategies and share the specific trading opportunities they've identified in equities, options, forex, futures, cryptocurrencies, and more. Claim your free pass to join them at tradersexpo.com.